Welcome to the deep dive, where we try to cut through the noise and, really get you informed. Today, we're diving into a company that's seen just absolutely staggering growth. Palantir Technologies, its stock, PLTR, it soared over 480% in the last year. Just the last year.
Yeah, it's incredible.
And get this, over 1,500% in the last 3 years. It recently hit an all-time high around $160.
Numbers that really make you stop and think.
Exactly. It's the kind of performance that just demands a closer look, doesn't it? So is this like an AI giant with limitless potential, or are we maybe watching the next tech bubble inflate?
That's the core question, really.
What's driving this meteoric rise, and what does the data actually tell us?
Indeed. And for this deep dive, we've gathered quite a stack of sources. We've pulled detailed financial data from places like FinViz, TradingView, Macro Trends, Simply Walson.
Usual suspects for good data.
Exactly. And we've paired that with recent news articles, various analyst opinions, a pretty wide range, actually. Our mission today is basically to pull out the most important insights from all this stuff. We want to help everyone tuning in understand exactly what Palantir is, what's fueling this incredible momentum, and crucially, what the numbers might reveal about its future.
Okay, good. So we'll unpack their unique business model, right? We'll dig into the financial health, explore the pretty intriguing insider activity.
Oh yeah, that's definitely worth talking about.
And navigate the surprisingly diverse expert opinions swirling around it.
Yeah.
So let's start with the basics. What exactly is Palantir, and how did it suddenly become such a hot topic?
Okay, so Palantir Technologies, it was founded way back in 2003. Yeah. Some pretty notable figures involved: Peter Thiel, Alexander Karp. It's headquartered out in Denver now. At its core, what Palantir does is build and deploy these sophisticated software platforms.
Yeah.
They essentially act as central operating systems for their customers. They handle massive data integration, large-scale analytics, think big data problems.
Right. And they've got two main platforms that sort of define their work, don't they? Gotham and Foundry. Tell us about those.
Absolutely. So first, you've got Palantir Gotham. This one is specifically designed for intelligence communities. It's used to help with counterterrorism investigations, helping users find hidden patterns in just vast data sets.
Like what kind of data?
Well, everything from signals intelligence, analyzing electronic communications to informant reports, that sort of thing. It also helps with operational responses to threats, sort of planning and executing real-world actions based on the intelligence. Their connection with the CIA, for example, famously started with software designed to detect roadside bombs.
Ah, okay. Very serious applications. And then there's Foundry, which sounds like it tackles maybe a broader challenge.
Precisely. Yeah, Palantir Foundry is more about transforming how organizations operate, creating a central system for all their data. It allows users to integrate and analyze information from all sorts of different sources, internal, external, all in one place.
Like a single source of truth for their data.
Kind of, yeah. Think of it as a unified data operating system. It helps organizations make smarter, data-driven decisions across the whole business.
Okay. So given how powerful these platforms sound, it's probably no surprise their customer base is, well, incredibly diverse and impactful. They operate through two main segments, right? Commercial, so non-government industries, and government, which is both U.S. and non-U.S. agencies.
Correct.
This approach seems really comprehensive. It lets them cover critical areas like defense, intelligence, but also healthcare, energy, financial services.
That's right. And on the government side, their client list is, well, pretty impressive. You've got the U.S. Department of Defense, the Air Force, the National Geospatial Intelligence Agency.
The hitters.
Definitely. And commercially, they work with giants, too. Companies like Amazon Services, AT&T, United Airlines, CVS Health, BP, Morgan Stanley. The list goes on. It really highlights the sheer breadth of where their software can be applied.
It really does. But the big question a lot of people are asking is, why this massive surge in attention and valuation now? What's changed?
Well, a lot of the recent momentum is very closely tied to the broader AI hype, what many are calling the AI revolution. Palantir is widely seen as an AI giant, an AI all-star. That label is sticking.
Okay.
And there have been some specific recent catalysts, too, like winning a big $100 million U.S. Army contract.
For what exactly?
For Next-Gen Command and Control. It's known as the NGC-2 contract. Plus other key Pentagon AI deals. Some sources even suggest it's a clear beneficiary under the current political climate.
How so?
Well, linking it to things like the what some call the Trump trade rebound. That's a term for market moves maybe associated with the former administration's policies, and potentially Trump's AI Action Plan, referring to potential government AI initiatives.
Interesting political angle there, too.
It adds another layer, definitely.
So while this whole AI narrative is clearly a massive driver, the real question is, do the financials actually back up the story? Let's dig into Palantir's numbers, because this is where the picture really starts to, well, take shape, or maybe get more confusing. When we turn to the financial health and valuation, the numbers are both impressive and, frankly, a bit perplexing. Let's start with growth. Palantir's annual revenue for 2024, $2.866 billion. That's a big jump, nearly 29% up from 2023.
And that growth trend is continuing into the new fiscal year. Their quarterly revenue for Q1 2025 that ended March 31st was $884 million. That's a remarkable 39.34% year-over-year increase, almost 40%.
Wow.
And if you look at the trailing 12 months, the TTM figures, their revenue is now at $3.115 billion. That reflects a robust 33.45% increase year-over-year. So these aren't just big numbers. They show pretty consistent, even accelerating top-line growth.
Okay, so revenue is strong. What about profitability and efficiency? Those metrics look pretty good too, right?
They do. They boast a strong gross margin, 80.01%,
Oh, yeah.
and a net profit margin of 18.32%.
80% gross margin is huge for software.
It is. It tells you they have a highly scalable product, low cost of goods sold, pretty typical for successful software plays, but still very strong.
And earnings.
Earnings have grown significantly as well, up 91.2% over the past year at 82.5% year-over-year on that TTM basis.
These numbers are really impressive.
Right.
What do these profitability metrics tell us about the sort of underlying health and efficiency, especially given their unique model?
Yeah, they're strong indicators. That 80% gross margin, like you said, points to scalability.
Right.
And look at their per-employee metrics. Palantir generates $728,030 in revenue per employee.
Okay.
And $117,430 in net income per employee.
Yeah.
That really speaks to their operational efficiency. It means they're generating significant value with, relatively lean workforce compared to revenue. That's crucial for sustained profitability.
Okay, but then we get to the valuation puzzle. This is where things get really debated, really complex. The company's valuation metrics are just extremely high. We're talking a price-to-earnings ratio, PE, of over 690.
690.
Yeah. And a price-to-sales, PS, ratio exceeding 120. These aren't just high numbers. What they fundamentally mean for someone looking at this stock.
Right. These ratios aren't just high. They signal an almost unparalleled market belief in Palantir's future growth. A PE over 690 means investors are paying 690 times current earnings.
Which is just astronomical compared to most companies.
Exactly. Many big established tech giants might have PE ratios in the 30s, 40s, maybe 50s, 690s, way out there. And a PS over 120 is also exceptionally high. It implies investors are paying $120 for every single dollar of annual revenue the company makes right now.
So basically, investors are paying a massive premium today.
Yes, betting very heavily on massive future expansion. It means they're paying today for growth that must materialize almost perfectly. It leaves very little room for error, you see. A single stumble, a missed quarter, could have really disproportionate consequences for the stock price.
And that fragility, maybe that's why we see such a huge range of fair value estimates. Analysts, community contributors. Estimates seem to go from as low as $90 all the way up to $440. This huge difference fuels these intense debates. Is it undervalued somehow or massively overvalued? What's driving such a massive split?
Well, it's not just a simple disagreement, is it? It really highlights the unique challenge in valuing a company like Palantir. Traditional models, they kind of struggle to account for its deeply embedded government contracts, right? Some of which are classified.
Yeah.
And then there's the speculative but potentially huge impact of this AI revolution on its commercial business.
Yeah.
How do you quantify that potential? It forces investors to basically decide which narrative they buy into more. The disruptive, indispensable AI tech story? Or the story told by historical valuation norms?
A leap of faith either way, maybe.
Perhaps. It's why you hear some analysts explicitly calling Palantir's valuations insane, drawing parallels, maybe worrying ones, to the dot-com bubble back in the late 90s.
Okay. So considering those, truly extreme valuations, the next logical step is to see how insiders and the pros, the analysts, are reacting. What does their activity tell us? And we have seen a pretty significant trend of insiders selling over the past 3 months.
That's a critical point, yeah. Our sources show key figures like co-founder Alexander Karp, also Stephen Cohen, Shayan Sankar. They've sold shares worth tens of millions of dollars each. The general observation from some quarters has been that management has been sell-only.
Which always raises questions, doesn't it? Especially when the stock's at an all-time high. What's the signal there?
It often does raise questions about management's confidence in the future prospects at this price level. It's a signal many investors watch very closely.
Here's an interesting twist on that. Heather Planishek, the new COO and CFO, she actually made a pretty notable purchase, over $1.1 million in shares back in May 2025.
Ah, yes.
So while many longtime insiders are selling, a key new exec is buying. How should we interpret that conflicting signal?
It's an intriguing counterpoint, definitely. While, extensive selling from longtime execs can raise eyebrows, a substantial purchase by a new, high-level executive like Planishek, that can signal her confidence in the strategy moving forward. Maybe she sees value even at these levels. It suggests she's buying into the vision she's now helping to lead. Just to add context, insider ownership overall is about 8.5%. Institutional ownership, the big funds, is much higher, over 51%.
So the institutions still hold a lot of sway.
Very much so.
And if we look at the broader analyst sentiment picture, it's quite mixed, isn't it? We've seen some recent upgrades. Piper Sandler moved to overweight, set a $107 target. Loop Capital started with a buy. But then you've also got several downgrades. Jefferies went to underperform. Mizuho also downgraded to underperform.
Right.
The consensus target price on FinViz is around $115.50. But TradingView shows this huge range, estimates from $40 way up to $178.
And this wide range of opinions, it reflects exactly what we were just talking about with the valuation puzzle. It highlights these deeply divided views on whether Palantir's current growth, the AI story, justifies this extreme valuation, or if it's due for a significant correction. Analysts are really wrestling with how to quantify the unique value here versus just looking at traditional metrics.
And this plays out in the technical outlook as well, right? Some charts, some indicators suggest a strong buy for the one-month outlook, but others are pointing to the stock being technically overbought or trading with what they call a rising wedge formation, which, as I understand it, can sometimes signal a bearish reversal, a move downwards. How do you make sense of those conflicting technical signals?
It really suggests the stock is at a kind of crucial juncture. The strong buy signals probably reflect the ongoing momentum, the positive sentiment, especially around AI.
The hype train continuing.
Pretty much. But those overbought indicators, the rising wage pattern, they suggest the upward trend might be losing steam, or there may be a period of consolidation or even a pullback could be coming. It really points to a battle shaping up between the bulls and the bears. High volatility seems quite possible.
And what's particularly insightful here, I think, are the market narratives around Palantir. You've got Jim Cramer, for instance, with a very bullish view, saying Palantir is going $200, has no quit.
Yeah, he's been quite vocal.
And this sentiment connects Palantir to those broader market trends we mentioned, the so-called Trump trade rebound, the potential impact of a Trump AI action plan.
Yes, Kramer's view kind of encapsulates that strong belief among some investors that Palantir is just uniquely positioned to benefit from more government spending, a broader push towards AI integration in critical areas. And that narrative, that story, can often override traditional financial analysis, can't it? Especially in a market driven by themes and momentum.
Absolutely. So a lot of different forces at play. Fundamentals, sentiment, technicals, narratives. And looking just ahead, there's an important upcoming catalyst. Palantir is expected to release its Q2 earnings report on August 4th, 2025.
Right, that's just around the corner.
And some analysts, like Citi, are already predicting a revenue beat. They expect strong government and commercial AI performance to drive that.
It will be really interesting to see how the market reacts to those actual results. Given all these varied expectations and the powerful narratives already baked in, that earnings call will certainly be a moment of truth for many people watching the stock.
Definitely one to watch. So what does this all mean when we try to wrap it up? Palantir Technologies presents this truly fascinating case study. You have explosive growth fueled by this unique position in government intelligence, cutting-edge AI.
Absolutely, a powerful combination.
Yet, that growth comes with these extremely high valuations, this noteworthy pattern of significant insider selling.
Balanced, though, by those new executive purchases and very strong institutional backing. It's a complex mix.
Understanding these complexities is just crucial, isn't it? It helps you navigate this fast-paced world of tech investments and hopefully gain a more nuanced perspective on the market stories versus the raw financial data.
Exactly. This deep dive hopefully has shown you the power of looking beyond just the headlines, beyond the stock chart, to really see the full, intricate picture. of a company like this.
As Palantir continues to integrate its powerful data analytics, its AI platforms into more and more critical government and commercial sectors around the world, its increasing influence, it naturally brings up bigger societal questions, doesn't it, for all of us?
Hmm.
Questions about data control, about privacy, about the very future of decision-making itself. What kind of world are we building when such powerful tools become these central operating systems for so many important functions? Something to think about.